Well, an important event to watch out for today will be the Supreme Court judgment on the pleas challenging the Feb 12 circular. Lata's with us to run us through all those details. Lata?
This Feb 12 circular has become a jargon, but I think we need to remember what is this circular that was passed by the Reserve Bank on February 12, 2018. It actually made the entire NPA recognition a little stricter. If your loan is due on, say, March 29, if you paid on March 30, you are in default. That was the meaning of, that was the regime that was introduced. Otherwise, if your loan was due on March 29, you could pay up until April, May, before it became NPA. That is, before 90 days, if you paid, you were kosher. The RBI said, no, nothing doing. You pay on due date. Even one day will be equal to default. The second thing they said is that if you default by a day, if you're delayed by a day, all the bankers have to get together and within 90 days restructure your loan. And if it is restructured in such a way that the original scheme is then it becomes an NPA. So that again put the borrowers on notice. A third thing they said is that they didn't say exactly, but all bankers have to agree to that revamped, structure of the loan. Now, RBI says we never said 100%. It's not there in the rules. But effectively, that's what happens. All the bankers have to agree. Invariably, somebody or the other would say no. Then there is something called how do you upgrade the loan, something that has already become an NPA. The rules are very strict according to the Feb 12 circular. You have to pay all your overdues, the back payments, and 20% of the principal. Only then it will be upgraded, which again everyone thinks, or at least the borrowers think, is very strict. So what were their demands? The demand one was that this one-day default should go, that you should get maybe 90 days, maybe 30 days more. Because one day you can always be, out of town or some payment in, something which, which bond dealers don't take. If you have a bond and you don't service it on the day of the interest due, your bond is immediately downgraded. So what RBI is saying is we are applying the same rule, but in any case, that's one of the demands in the court, that this one-day default should go. Basically, the big demand is every sector wants to be carved out. Power sector says it's not our problem, DISCOMs are not paying, the government has not got its act in order, there is no law and order, power is being stolen, and we are suffering. So we are not defaulters. They want to carve out for power from Feb 12. Likewise, shipbuilding guys are also asking, we are a cyclical industry, so many jobs lost, export of the country, so we want to carve out. So you want to wonder what the court may do. Will it ask for this one-day default to go? Will it ask for some carve-out? Will it allow? Or will it say that, this 100% is too much, 66% bank, all that is needed to okay a revamped scheme? This may come. Many people expect that the court may force this because RBI itself was not pressing this. So they may say that we will allow the Feb 12 circular, but you have to write it into the law that only 66% of the bankers need to approve a revamped scheme. That is what most people expect will come. They don't expect any specific sector to get carved out because you give one, then it becomes a precedent everybody will ask. The big question is whether the circular itself will be thrown out. I mean, the constitutionality of the circular is being challenged. I seriously doubt that will be accepted by the court, but then anything can happen.
All right, thanks a lot for that, Lata. So a new stricter set of rules coming in from the RBI. We're shifting focus now to the commodity space. Manisha Gupta is here with an update as always. Manisha.
Hi, morning. And the big story really continues to be the crude oil prices, which are now trading at 2019 highs, fresh highs really, because we have seen more than 2.5% gains in the U.S. crude oil prices overnight. And this is after the U.S. government says that they are considering additional sanctions against Iran. Remember, it is the first week of May that the U.S. will be reviewing that. And they say that some countries like China, India, Japan, South Korea, etc. may continue to enjoy the waivers. But 3 countries like Italy, Greece and Taiwan may be removed from the waivers list. So this is what the markets are seeing as very, very bullish. Also, apart from that, it's not just about Iran because U.S. has instructed oil trading houses, refiners to further cut dealings with Venezuela also. The U.S. rig count has been declining. And another very positive that the markets are reacting to right now is the OPEC supplies for the month of March. That number has come and the OPEC output has been the lowest in 4 years for the month of March. And that clearly seems to be adding more premium to prices. So we have seen very strong gains continue as we begin this new quarter.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across to Mangalam. He's joining in to tell us about the derivative action. Hey Manglam, morning.
Morning, Nigel. So, yesterday the good part was the FIIs buying in cash market resumed after a bit of a sell-off in the previous trading session, about an 86 crore sell-off. The FIIs bought close to around 900 crores in the cash market. The domestic institutional investors, for the first time in many days, actually outsold the FII purchase, about 1,000 crores sales seen out there. The Nifty futures premium, again, we keep talking about this, intraday spiked from 56 points to 79 points. So that's telling you that there was some demand in index futures, and that's exactly what came about. 500 crore worth purchased by the FIIs in index futures, nearly 8,000 long contracts added for about 22,000 short index contracts. However, remember the last hour of trade, we saw a bit of a wobble. The Nifty as well as the Nifty Bank ended off highs. So the FIIs look like they're playing this market via options. So 1,400 crore worth purchase in index options, an equal amount of long calls and long puts bought. However, the data point that stood out was the FII short calls came in at 5,000 contracts, and this was nearly 5 times more than what they did in index puts. So maybe a bit of an upside hurdle is what the street believes, at least in this this expiry, because that's where the sort of open interest action took place. 11,700 put saw some writing, that's telling you there is support, but 11,800 call continues to see some selling. So keep an eye out on the record high levels as well as yesterday's high of 11,738.
All right, thanks a lot for that, Manglam. But that's all that we have on Power Breakfast today. Thank you for watching. Bazaar Morning Call comes up next.